Tell us about DPN Casa Capace. What is it, and what do you guys do?
Look, predominantly house and land world. I'll probably say we pitch at the higher end of the housing delivery market. We're out in the growth suburbs at the moment, so southwest, northwest, Sydney, as well as Victoria, Geelong, and Queensland as well, so eastern seaboard predominantly. But it is very much house and land world. We've got a slightly different model, although I actually agree with many of the comments that are being made. We tended to, given a history that I'd had in working for state government back pre-NDIS, I'd seen that there was a dynamic with SIL operators where they need to achieve a certain critical mass of clients that they would be looking after, but at the same time matching personality types, just as it would be for you and me. Putting 5 people in a group home is rather difficult, and making sure that everyone gets along well. So there was this constant tension between the two dynamics. So our model looks at think of it as a duplex where you might have a 3+2 or a 4+2 or a 3+3 type model, where it allows that efficiency for the SIL operators to come in and provide the staffing and the operation. But at the same time, it allows them to pair people with 1 or 2 others rather than with 4 other people.
And we heard earlier that there's from Summer Foundation that there's sort of 5 categories of I guess need from a housing perspective. Which categories would your developments fit into?
Look, we predominantly focus on the high physical support. We do all the other sectors as well, but at the moment, our first port of call was high physical support. We often have to integrate because you may not want or want to have 5 people with high physical support in one setting. So it comes back to that matching of people. So there might be 1 or 2 robust people with robust category in there, with maybe 1 or 2 high physical support, or people with less care issues. It really comes back to the personalities, and the carers really know the personalities, and quite often they're in existing accommodation somewhere else. So they may have been living together, 3 people living together in other accommodation, and then are brought across into this house because they're great mates and they've known each other for many years, and they want to stay together.
And so then, Barney, what's the commercial model of this then? Are these individual assets being sold on to individual purchasers or bundled up into a fund? How are you doing the deal?
Yeah, great question. Look, we knew that there were going to be a host of different models out there, which and there are. Our model, we approached it in a different way. So we retain, we develop and retain in a fund, established a fund, and the ownership stays with the fund. I think the reason that we went down that path was because there was a certain amount of expertise in the understanding of what the operational needs are going forward after the data PC. But at the same time, it's an advantage, we thought, to the SIL providers to say, look, we've got skin in the game. We're going to deliver a product that we're accountable for over the long term as far as its care and maintenance is concerned. So, and we've found that that's a really big advantage as far as some of the SILs are concerned, because this is very new space for a lot of the SILs to get their head around. So that nervousness of, look, what happens when something goes wrong dissipates when we say, look, we're on the hook for it, we fix it, we maintain it, we look after it, and we're the landlords, and you need to look after the people.
Yeah. And so where's that capital coming from then for this fund? Are you working with impact investors? Are you working with institutions, high net worths? What is the profile of that capital?
All of the above. So yes, Brightlight are our fund managers. They went out and raised capital with Christian Super and a couple of high net worth family offices for the first tranche of funding, just under 100 mil. We did have discussions with some of the larger funders and supers, but it was new space for them, and they wanted to see how it worked out in the sub 100 mil fund bracket, to kind of kick the tires and watch how it progresses. It's been quite positive from that perspective. We're constantly in contact with them, and I think that it wouldn't be too long before it actually morphs into the next stratosphere of funds, which is where it really should be.
And we've got Simba from Bright Light joining us in the next session as well, so we'll tap into that. Damien, just one quick question for you as well. I mean, you seem a little contrarian to the others, particularly in relation to the return profile. We heard about demand, right? And trying to predict what the actual underlying demand for SDAs is in the short, medium and long term. What's your read on demand, particularly in relation to the development of new property?
Well, yeah, I mean, it's pretty hard to truly, unless you're dealing with these people already as part of your core business, to get a sense from that story. A lot of the public data, it's pretty useless, is my view. You get told an area is super hot, and I can tell you, I can jump online and see vacancies in that pocket. So, I would not rely upon that. You need, that's why I sort of say there's an opportunity in this space if you are partnered with the right care or industry provider that's in this space. If you're not, I'd be very concerned. And why I've got a lot of concerns, so we have probably had over 400 to 500 individual mum and dad investors contact us to say, can you build an SDA home for us? And our answer is no. And it's not that, we're a building business. Well, first, we don't want to deal with one-offs. We only want to deal with bulk. But within that, they're just saying, I went to a seminar and I heard I can earn 15% returns and this is great and I want to get on the bandwagon. And that is a major issue, that there's going to be a lot of what I call subpar housing built in a lot of locations with people that do not understand what they're doing, using their superannuation money. And there's a bunch of developers that are going to say, hey, I can make money out of these guys. And there's going to be some blowback here in this space. So I'm conscious of all that, you've got a lot of unsophisticated people moving into it. You've got a lot of people saying, how do I pull a buck out of it? But, you've got to look at it. It's not about just making a dollar, and the demand's there, but you've got to find the people that really understand the demand versus just reading some report that got produced with data that I can tell you the data's not, that as accurate.
Well, for what it's worth, we'll do our very best to shine a light on the reality of the situation as well. And I think it's an important thing for the broader reputation of the industry over the coming years as well. Now, Ashley, I'll jump across to you. I want to get your sense on what's next for Third Eye. What are you looking for now? Do you have a growth appetite for more of what you're doing?
Yeah, definitely. We've sort of started looking at different models of where we can sort of expand in this space. We speak with a lot of OTs and SEAL providers, just trying to gauge, because as Damien said, the data that's out there, in particular, the data released by the NDIS, it doesn't marry up to, say, the information that's been found by social ventures. And if you then compare that to the GoNest websites or housing hubs, there's a real disparity there in information. So we've sort of started speaking to a lot of OTs and SEAL providers and just getting their feedback on different areas and where they think there's growth. Obviously, Summer Foundation have really campaigned heavily for this 10 and 1 model, but the feedback that we've sort of been getting recently has been that doesn't necessarily work for some of the more high care participants. And so we're sort of looking at different designs that we can sort of bring to the market and build into our developments that maybe sort of go down to 2 units sharing the 1 overnight assistance, like for individuals that need more 24/7 care, and sort of looking at different designs that are going to meet the needs of individuals, and also probably looking a little bit more at expanding into the space that caters to families, because at the moment a lot of the housing, and until very recently when there was an announcement by the Commission to changes with the SDA payments, it's actually been quite difficult for families, and in particular couples, to be housed together. So we're looking at ways that we can provide housing solutions that is actually going to cater to the broader market.
Very interesting. Patrick, I'll jump across to you. I just got a question in relation to the actual design and subsequent cost of what you're doing there within the Cedar Woods communities. One of the questions that's come in is a fantastic one, is how is the design changing as part of your model, and what kind of cost premium, if any, is associated with it?
So we've been on the path doing a proportion of gold standard apartment configurations in our projects prior to us getting involved in SDA anyway. So there wasn't a big change in the actual dimensions and layout of the buildings. What we're finding is there's some changes in doorways and cabinetry. The essential format of the apartment buildings hasn't changed much for us. So it's been relatively easy. The tricky parts are making sure that all parts of the building comply with the SDA guidelines. And so we've got to be careful to make sure that they actually track right through, even to car parks and common areas. And that's the part we've placed a lot of attention on. Cost-wise, the groups we're working with are paying the extra costs for the fit-out changes, so that helps. The challenge for us is making sure that we've understood the total costs, because when we get to the completion, it just has to comply. Otherwise, the asset would need to be reworked.
Barney, we've got a question for you in relation to the sort of the funding realm. The first part of that question is really about the size and the extent of investment capital that would be out there for this sector. Do you have a read on that?
Oh, look, it's potentially enormous. At the moment, our fund, as I said, the first tranche is, I think, up to 88 mil for our first tranche. It's certainly a potentially $1 billion funding model plus. I think if you look at the raw numbers of demand and supply, just even up to the current point, it's quite significant. I mean, you just need to look at typical neighbourhoods. There would be numerous people already living in those neighbourhoods. Previously in government housing, government was providing a lot of this housing. And as we know, government are quite rapidly moving out of some types of housing so that they can provide other services. So as they move out, and add to that, the new supply of needs on a yearly basis. You know, unfortunately, people have accidents, people join that queue of requiring disability housing year after year. So it's just right now there's a significant demand. Going into the future, I think it's an enormous funding category, but it's evolving. You know, it's an evolving type of housing. It's moved out of that government sort of delivery model that really not many people probably had heard about before, and now it's getting the headlines in the newspapers and the commercial news. So people are inquiring about it. They are reading the flyers where there's people saying, look, you can make a healthy return out of this type of housing, but it's not for the faint-hearted. There's you know, it's if it sounds too good to be true, it is. I'm sure most of the people that have been involved in this type of housing will tell you it's a lot more involved than it might seem at first glance.
And what about the role of debt, Barney, in terms of funding the specific projects, whether it be the individual houses or the broader developments? What's the role of debt in that?
Yeah, look, debt's got a vital role. It's ironic we're in this time at the moment of COVID, and you know, it's funny we were reflecting just the other day with discussions with some funders. You know, if you go back, rewind about a year and a half, where we're having conversations with funders, and they were very risk averse and looking at this type of housing as a very new and potentially risky type of delivery. And you fast forward to now, and a lot of those assumptions around commercial buildings being the safest and so on, I think a lot of those assumptions have now been brought into question, for the better, I think, for people to really look at this sector and say, you've got a underlying social need, which we can all see, but at the same time, let's really analyse the fundamentals of this as an investment product, because it's got secure funding over the long term. The people that tend to move into these places are not as transient as your mum and dad might be that are renting a house. So really have a good look at it, and not only are having a really good social impact, but fundamentally the investment stacks up. So we see a greater role for debt to move into this space, definitely.
Well, we're joined by Jacob Edwards from Bank Australia next, as well as some big funds, and we'll definitely be unpacking that. Look, I feel like I could keep going for hours on this particular topic, but unfortunately we are out of time. Thank you very much to our panellists today, to Ashley Button from Third Eye Group, Barney Oros, DPN Casa Capace, Patrick Archer from Cedar Woods, and Damien Winterburn from SDA Property Group. Thank you all for joining us. Coming up next, we'll be joined in a session called Getting It to Stack Up, the pointy end of developing disability housing. We'll go one step further and look at funding, legals, investment, and valuations to truly try to understand how to get these things to stack up from the development industry's perspective. Once again, a big thank you to our platinum partners, Aussie Lifts. Don't forget to reach out to Daniel if you're interested in understanding what they do, and we will see you shortly after the break. Once again, thank you to our panelists. We'll speak to you soon.